How can cryptocurrency solve economic problems? 1. Inflation, the root economic problem. What is inflation? Inflation is the continuous increase in the general price level of goods and services over time, which causes the purchasing power of money to decrease. In simple terms, if inflation rises, your money buys less. For example, today, $100 buys 10 items. After 10% inflation, the same $100 may only buy 9 items. Why does inflation happen? Inflation often happens because governments print too much money, central banks lower interest rates too much, supply shortages increase costs, economic crises lead to monetary expansion. Institutions like the Federal Reserve control money supply in the United States. When they increase money printing, inflation pressure can rise. Why Bitcoin was created? After the 2008 financial crisis, trust in banks and central authorities weakened. In 2009, Satoshi Nakamoto launched Bitcoin as an alternative monetary system. Bitcoin introduced a fixed supply of 21 million coins, a decentralized network, no central authority controlling it. Because of its scarcity, Bitcoin is often called digital gold. Similar to gold, Bitcoin is limited in supply and cannot be printed endlessly. Major economic problems and how crypto helps. 2. Currency devaluation. Some countries suffer from extreme inflation, hyperinflation, where local currencies collapse. For example, Venezuela experienced hyperinflation above 1,000,000% at one point. How crypto helps? Citizens can store value in Bitcoin instead of their local collapsing currency. Crypto works globally without needing local banks. 3. Financial exclusion. Billions of people worldwide don't have bank accounts. Problem? No access to loans, no access to global payments, high remittance fees. Crypto solution? Anyone with internet can create a crypto wallet. No bank approval required. Lower cross-border transaction fees. 4. Centralized financial control. Traditional systems depend on centralized institutions, such as the International Monetary Fund, World Bank. These institutions can influence national policies through debt and monetary programs. Crypto alternative? Decentralized finance, DeFi, smart contracts, peer-to-peer lending without intermediaries. 5. Corruption and lack of transparency. Governments can misuse funds or manipulate financial systems. Blockchain advantage? Public ledgers, transparent transactions, immutable records cannot be altered. For example, blockchains like Ethereum allow transparent smart contract execution. Is crypto a perfect solution? Not completely. Cryptocurrency also has challenges: price volatility, regulatory uncertainty, scams and hacks, technical complexity. However, it introduces a powerful new idea: money that is not controlled by any single government. Why investors and traders are attracted? Crypto is attractive because it can act as a hedge against inflation. It offers high growth potential, it operates 24/7, it is global and borderless. Many investors compare Bitcoin to digital gold because of its scarcity and decentralized nature. Final thought: cryptocurrency does not magically fix every economic problem, but it challenges the traditional financial system by offering scarcity instead of unlimited printing, transparency instead of hidden manipulation, global access instead of restricted banking. In a world facing inflation, debt crises, and financial inequality, crypto represents a technological attempt to redesign money itself.